Hey, Courtney Smith here, and I got a really interesting email from one of my students here, which raises some really important concepts that can help you make money. So let me first read the email. 2 years ago, in a 10-month period, I got a 16% return using the 55-55 channel breakout with 1% risk per trade. Let me first translate that into English. 55-55 means that he bought when it broke the highest price of the last 55 days with a protective stop loss at the lowest price of the last 55 days. And of course, they change over time. Let's get back to him. I just bought all of the Investors Business Daily 50 stocks I could start with the first one. The first 15 trades that finished were losers, 15 straight losers in a row, but less than 1% risk each time because the 55-day low was moving up. So, and that was saving him a lot of money. The winners, of course, took longer to develop, and at the end of 10 months, I had 48% winners. Not that great. This biggest winner, I remember, paid off nearly all of the losing trades by itself. The 16% return was made by the rest of the trades. It bores a lot of people, but I find trading statistics and expectancy so fascinating. Oh, there was no pyramiding. I'll get to that in a minute. I'm very curious how to see how the next year will be since you are picking the stocks, longs and shorts, and pyramiding in Wall Street Winners. He subscribed to my newsletter. Was Wall Street Winners ever had a 100% year since 1995? No doubt my 16% return will be smashed by next August. Thanks. I look forward to watching the distribution and magnitude of the winners versus the losers over the coming year. Jason. Wow, what a fantastic email. Now, he brings up some very important issues. The first one is that his first 15 trades were losers. Jason actually shows his excellence as a trader by being persistent and consistent and ignoring the 15 losers. That's impressive. Very few people can do that. The initial month or two are nearly always losing months whenever you start a trend following program. That's something that trend followers don't tell you. And I'm a trend follower, but the first couple of months, usually you lose money. As Jason points out, the losers come quickly, but the winners take time to develop. After you've been trading for a while, you nearly always have winning trades in existence that pay for the losers, and you end up being a winner. So in other words, I start out, I have 10 trades, 5 are losers, 5 are winners, but the losers come quick, but the losers take time to develop. And then eventually you always have some big winners in your portfolio that are paying for the little losers. Big winners, little losers. He also mentions that he risked 1% of his equity per trade, which is something that we teach in our Stock Success School, but that the losses were usually not that big because his stop loss was always creeping higher using the 55 a day low. So his 15 losses were not 15% of his equity, but a lower number. He doesn't say how much it is, probably closer to 9 or 10%. So there were losses, but no big losses. He used the investors.com IBD 50 list to find which stocks to buy. And that's a good starting point, but our proprietary best of the best technique is far better. We start with the same IBD 50, but then we apply more and more filters so we get literally the best of the best stocks. I think if he used the best of the best technique, he probably wouldn't have had 15 straight losers, but of course, I don't know actually. But the more you can filter your trades and make it harder to put on the trade, the higher percentage of winners you'll have and the more money you'll make. The next key fact he talks about is that his biggest winner paid off nearly all the losers combined. There's an old saying that goes back 100 years, cut your losses and let your profits run. This is exactly why. All you need is 1 or 2 winners and you're a winner. But if you only have little winners, hard to make a lot of money that way. Now, this is an important aspect of trend following. You have to have big winners to pay for all the little losers. And fortunately, trend following gets you those winners. But few people wait that long. They take quick profits, not big profits, and that sabotages you. Everybody says, well, I make $1,000. I'll take that quick $1,000. Oh, you can't go broke taking a profit. Yes, you can. You can't take quick profits. You need to let those trend following profits build and build and build so that they're $5,000 profit or $10,000 profits. So most people don't have the patience to watch a little winner turn into a monster winner. Thank goodness that Jason didn't have either of those two very common problems. Good going, Jason. He then talks about how boring it is. Trend following is boring, and I agree 100% with that. This style of trend following is boring, really boring. It takes time and patience, but it is really profitable, very profitable. He says that he made 16% for 10 months of trading. Let me just round that off to 20% for a year. And that is after he started with 15 straight losing trades. So that means that his next year of trading wouldn't have those losers, so he should be much more profitable in his second year of trading than in his first year. He then says he made the money without pyramiding. Pyramiding is adding to a position that is already a profitable trade. It's the exact opposite of dollar cost averaging. Pyramiding, as I teach it, is a way of doubling or tripling profits because you're adding to winning trades, and the profits from the first trade pay for the potential risk in the second, third, fourth, and fifth trade. So what that means is that instead of he would have been making a 40 to 60% return instead of 20% if he had been pyramiding. He's now using our Wall Street Winners video newsletter to pick his stocks rather than just the IBD 50, and that should be much more profitable than just using the IBD 50 because we're far more selective on which stocks we buy. That would boost the percent winners significantly. So in my trading, I basically look at about 65 or 70% winners. He was running around 50%. So that's going to boost his return a lot. He asked if we have ever had 100% gains in 1 year. Sure, several years, in particular, right after 2008, we had several years in a row. I think it was 3 years in a row where we made over 100%. 2017, I remember it well because it was one of the best years I've ever had. Last year, pretty good. This year, okay. I love this email because Jason showed several attributes that show that he is a very good trader and will be very successful. Number one, he was rational. He thought what he was doing, it was good. He had a plan, and then he followed the plan. Most people don't have a plan, and then they don't follow their non-plan. So they just use emotions, and that doesn't work. And he was consistent and persistent. Even in the face of 15 losing trades, he continued to follow his plan. That shows incredible intellectual fortitude. I really compliment him on that. And these are the hallmarks of a successful trader. So, if you want more information on Wall Street Winners or Stock Success School, look at the description below. Of course, subscribe for more tips on the reality of trading, not the fantasy of trading. We're all about reality based here at our company. All right, everybody, we'll talk to you later.